Okay guys, welcome to this week's video trading review from Magnetic Trading. So this week we are going so those of you that may not be getting on with short-term trading and prefer long-term trading, we taught you a very valuable trading strategy back in February. Now, had you been applying this method, you would have been making some tremendous amounts of profits over the last few months. We're going to go back and teach you that in just a second, but have you taken action? Is this something that you were interested in? And if you haven't taken action, it's just a friendly reminder that we can give you very valuable information and even very valuable trades, but if you don't go ahead and learn or even go and apply that information, how can you make money? So let's go over to the charts now and recap on what this long-term strategy is. As promised, is going to be a longer-term strategy that we're going to teach you, and you can use this on all index global markets. We're going to use the FTSE 100 as an example for this case, but you can use it on the ASX in Australia, you can use it for the Dow Jones in America, you can use it for the DAX, the German index. Whatever it is, it works. The first thing you need to do is go to a weekly chart, and you want to ascertain whether the longer term trend is up or down. In this case, we can see the trend is up. So we had the coronavirus drop last year, and the trend has now moved up. So let's just show you the trend channels at the moment, clearly moving to the upside. So it's only the weekly chart that we want to be ascertaining the trend. So that is our trend. And really, actually, for this example, I'm not going to be changing my view unless we see at least 2-day closes below the 5,500 area down here. So 5,500, if we see 200-day closes below there, then the trend will have changed to the downside. And then actually we'll start to be looking to, if the trend moves to the downside, we'll only be looking to sell. But if for this system, if the trend is up, we only look to buy. So you're only looking to align with the main trend for this particular strategy. As I say, at the moment it's up, so we're only going to be looking to buy. Then we move to a daily chart. And what you want to use here is an indicator called the Bollinger Band. So if I click it off, we've got a raw chart here, but if I click it back on, you'll see that we've got a channel and a line created. More of that in a second, but the setting for this is 22. So 20 and then 2, that is the standard settings for this. And you can find the Bollinger Band indicator on any broker platform that you use. Any decent broker platform will have a Bollinger Band setting. And we're really then waiting for the market to move down to the bottom of the Bollinger Band channel. It doesn't have to be exactly touching, but towards the bottom. Then we're going to look for a buy signal. Remember, we're only looking to buy because the longer term trend is up. If the trend turns down, we'll look for the market to move to the top of the channel. We'll be looking to sell, but at the moment it's only looking for buys. So in this example, we can see that the market moved down here last year. We actually use this strategy to get into a longer term trend. We rode this up to 6,700. So 6,700 was our target eventually achieved on this trade, which was very nice. We took half profits on the way, but we rode it all the way up to 6,700. And again, we're waiting for the market to move down, but this is the observation candlestick here, this red one. We can see it's right at the bottom. Had it moved lower, we would have just waited, but we're waiting for the next daily candlestick to break above the previous one once we get to the bottom. So this is the bottom here, and this candlestick actually breaks above this red one. So we're into the trade. It needs to break by 2 points. You can see the candlestick on this example is 56.12, so we're going to be getting in at 56.14.
allow for your spread as well, of course. And then your stop, you're probably thinking, well, is your stop just a break of the lowest candlestick? No. The stop we're going to use is actually called the 5-day ATR. Let me just show you what that looks like. So if you're on our mentorship program or our pro trader program, then you'll get these reports every day. But one of the columns here is the 5-day ATR, and that's the average true range. So it's the average true range of the FTSE or the NASDAQ or the DAX or the CAC or the Australian market, whatever it is, because this strategy works on all the markets. But in this example, it's the average true range over a 5-day period, which on the FTSE at the moment today is 84.2. So we'll just call it 85. So where would we get into this trade after just teaching you then? Well, could we get in today? No, because we're not towards the bottom of the Bollinger Band. So really, once the market moves, if it moves down towards this level, we're going to look to buy. I mean, actually, it did it recently. We got down to the bottom here, and this candlestick breaks above this candlestick here at the bottom, so we're into the trade. You'll see that the high of this red candlestick here was 64.63, so give it a nice clean break. So 64.66 is your entry. You're in here, and then you would have had a stop of the 5-day ATR, whatever that is. So the 5-day ATR, as I said, can vary. It adapts to the market volatility. So if volatility is very, it's a large number, then the stop will be bigger. If volatility is quite low, then the stop will be more narrow. So this would have been an example. You would have got in and you would have had your stop, a 5-day ATR. Then you want to run the trade up to the equal amount for the target. So just say your stop is 85 points or 100 points or 150 points. Once you've reached that stop level, you want to, in terms of profit, you want to take half profits. So you close out half the position, and then it's a risk-free trade, can't lose on the trade. And then the ultimate target is back up to the top of the Bollinger Band. But at this point in time, once it gets towards the top, you're just waiting for a signal to get out, which again is just the reverse. So had you been in this trade here, once it gets up to the top, you're actually just waiting for a candlestick to break down. So it would have been actually here. So around 67.05, once this candlestick breaks down, which it did, you come out of the trade. And that allows for you to really catch big moves like this one, like the one we did last year. The market just moves up and up and up and up and up and up and up, and eventually, we come out. You would have come out around here on a breakdown here with the signal. So once you're out of the trade, well, then it's just a case of waiting patiently for it to drift back down to the Bollinger Band, and you rinse and repeat, and you do it all again. Remember, aligning with the longer term trend. So that is a longer term system that you can use. We will, of course, assist you and give you guidance on this particular trade if you're within our programs, advisor or mentorship or pro trader. We always give our clients assistance, but at the moment all I can say is around towards 6400. It's actually quite nice if it got down here, because it actually ties in with a support level anyway on the daily chart. But should it come down here, we'll be giving some guidance to our clients if they want to follow this strategy.
Okay, so that's a long-term strategy that you can take away today and start applying it on various index markets. I would urge you to go and see how that strategy has fared over the last few months on various index markets. So like the ASX in Australia, like the FTSE in the UK, the DAX in Germany, whatever it may be, go and have a look and see how you would have got on using that strategy. Have a great week trading, guys, and we will be back next week.